The average bull market lasts around 5.5 years, gaining 180%. And as of October, we're entering year 3. So the night is young, we're only a third of the way there. And this bull market is transforming into what many of the bears were hoping to see. See, more and more stocks are participating. All 11 sectors are in positive territory, with 5 sectors up over 20%. So the bull market is expanding, pulling more and more stocks into the rally. But see, October also brings its own set of challenges. Mutual funds will trigger enormous selling pressure from tax loss harvesting, a strategy used to lower tax bills by selling off losing investments to offset gains. Now, normally it wouldn't matter, but this is a $34 trillion industry. Just look at the history of October. Now, when we add election uncertainty and earnings season, this is a setup for a significant correction. Or maybe this time it's full of shit and I'm completely wrong. Let's go to the economy. Credit card debt hits another fresh all-time high, and 7% of that debt is now slipping into severe delinquency. But consumers don't give a damn, they're still spending. Who's gonna get rid of their Netflix, Spotify? They keep maxing out their credit cards on vacations. And why not? Biden just wiped out another $4.5 billion of student loan debt. And this helps out around 60,000 borrowers. That's a lot of people. This is about the size of a Kamala Harris rally in her dreams. Now, this is a serious amount of economic stimulus. So far, $175 billion have been forgiven from the Biden administration, which does contribute to fueling the economy. Okay, now let's move on to the most recent economic data. Jobless claims come in better than expected. The labor market is not falling apart. Retail sales beat expectations. Consumers are still spending, but at a much slower pace. Industrial production slumps for a third straight month. The economy is not out of the woods yet. Homebuilder sentiment is rising, with the housing market more optimistic about future rate cuts. And with the shortage of homes, it's no wonder homebuilder stocks continue to rip. China floats the idea of a 10 trillion yuan stimulus. That's right, I said 10 trillion. And this would be the equivalent to around 1.37 trillion US dollars. And they would do this by selling ultra long bonds. And the European Central Bank cuts rates for a third time this year. Now, with the election season ahead, the market is starting to price in a Trump victory. And this is probably bullish for Bitcoin, financials, and small caps, as these industries would receive the most deregulation. But let's not forget that elections are bullish for markets.